All right, my CEO is not going to stop talking, so I figured I might as well just cut him off right there at the knees. Oh, okay.
How you doing? We're with Liberty Fund. This is Jason Ricks. He's our COO. I'm Michael Flight. We went on an adventure, probably starting around 2017. Saw all these ICOs happening, and said, why wouldn't you tie it to real estate? So we decided to figure out how to do a real estate stablecoin, crypto with currency, and we ended up figuring out that you had to issue a security token. So Jason's going to give a little bit of a, what we've tried to put together with Liberty Fund, the fund thesis, and what we're investing in, and all the rest of it. And I will shut up and listen.
Well, thanks, guys. We got a smaller room, so this could be pretty interactive. So just raise your hand, or feel free, if you got a question, just let me know. I can stop. I'll kind of get through my spiel. I know we've got 20 minutes roughly to kind of get through this. So thank you, Michael, for the introduction. Big picture, Liberty Real Estate Fund is a core real estate fund. That means we're buying stabilized, occupied, single tenant net lease properties. And we're the first group that's done this. So we are the world's first single tenant net lease digital security offering. So Michael's got all the gray hair. I'm getting some. We've been in business in real estate for over 50 years combined. And we were investing in shopping centers, and at the time, we were running into issues with underwriting these big box tenants. A lot of the reasons for that is because of the leverage that a lot of these tenants had, the debt, and then a lot of sales were going online. So we had a hard time figuring out how to mitigate risk. And we settled on something that we feel like is the best parcel of real estate, and that's these single tenant net lease properties. I'll go into all the reasons why we like those. But ultimately, the reason why we started this, essentially our why, we felt like there's a better way to help investors. When you invest in private real estate offerings, you're married to that sponsor. Doesn't matter if they hold the building for 10, 20, 30 years. If they want to refi it when they want to, they can pay distributions when they want to, they can have capital calls when they want to. And life happens. Obviously, we're experiencing something with COVID. You never know when you're going to need that capital. There's life events that happen all the time. You may need access to those funds. And what we wanted to do was provide something that empowered the investor, that gave them more optionality and flexibility. And that's why we decided to tokenize the fund. So, brief background, Michael's been in this industry since 1990. He's worked with hedge funds, institutions. Myself, I've got background institutional and private investors as well, and we decided to join forces. Honestly, I was kicking and screaming when he wanted to get into blockchain. My background really with Morgan Stanley is, when I brought this up to them 3 years ago, they looked at me like, you're crazy, guy. Like, why would we stop the system that we have today? It's working for us, right? Everyone's used to the rules and everyone plays by those rules. So there's still a gap in education, and there's a little bit of a stigma and a little bit of a knowledge gap to try to make this happen. But we truly feel that if you're a sponsor today and you're not exploring this opportunity to help your investors, you're going to be falling behind over the next decade. So why don't we talk about a single tenant net lease building? What it is, why we like them. We've probably all passed them a million times when we're driving to and from work, picking up kids, doing all different types of activities. These are your, what we call main and main. Great visibility. They're the CVS's of the world. They are the 7-Elevens of the world. Starbucks, everyone loves a Starbucks, right? Go sit in a drive-thru for 30 minutes for a decent cup of coffee. We don't like them, by the way, but whatever. And then you have a lot of medical tenants that like this, and there's reasons for that. Tenants love these single tenant buildings, and all they are is they're situated usually on Main and Main, and they're just a standalone building with one tenant occupying it. Usually these are reserved for an easy analogy, blue chip real estate operators. Because of they're in high demand, and folks love to have that visibility and exposure. So there's a lot of different advantages. I think we talked about the standalone feature of the property. Imagine having 60,000 vehicles pass by your building every day. That's the reason why these tenants love them, and they get to control the site. So there's a lot of benefits there. The other benefit is they come with long-term leases. So if you buy an apartment complex, usually those are 1-year leases. On these single tenant properties, they're usually 5, 10, sometimes, I was just working with CVS. They wanted me to sign a 75-year-long lease. And then they wanted 5 options to extend for another 25 years. It's crazy, man, right? This is nuts. But there's reasons for that. And what's really neat about these leases is they come with baked-in rental escalations. Now, these can happen on an annual basis. They can happen on, let's say every 5 years, every 10 years. And so there's different strategies that fit different folks and different concepts for an investment. These generate significant demand not only from investors that are looking for passive income streams, but also from the tenant side. Tenants want to have the best piece of real estate. They want to be able to connect with their customer. They want convenience. That's what retail is all about. And just a quick anecdote. Out of all of the commercial real estate sectors, historically, single tenant net lease properties are the most occupied across the board. So 2008, where were their numbers at? 97.5%. Today, where they're at? 98%. Very, very stable. You get a lot of 1031 money exchanging hands here on this space because people want to park it in something that they know is going to generate really good, obviously profits and cash flow for you as an investor, but also they want to be able to occupy a really good piece of real estate in a prime market. And then my favorite piece of this, Michael always tells me not to harp on this too much, but it's the lease structure itself. These are called triple net leases, right? Some of you people are shaking your head like, oh, totally get it, that's awesome. All that means is they're covering your taxes, insurance, and maintenance on the property. So when I buy a deal, knowing that they're taking care of all of those issues for me, I can dictate pretty clearly what that future stream of income is going to be. It gives me a level of predictability to forecast future cash flows. So that's one of the primary reasons why landlords and investors love these asset classes. And lastly, again, you get great brand awareness, right? It's a billboard for these tenants. Doesn't matter if it's 30,000, 50,000, 100,000 cars driving past that piece of property every day. That is valuable exposure to your customer base. The tenants that we go after are not mom and pop. A lot of these buildings are occupied by blue chip companies, really. Most of the time, very well capitalized. Again, it's the primary piece of real estate in that market. It's going to be reserved for the best operators and users. So when we go after and look at these tenants that we're underwriting, a lot of them are publicly traded with huge multi-billion-dollar market capitalizations. That gives us a level of comfort and transparency when we're looking at these tenants. Now, we're not buying the tenant, we're buying the real estate, but we're buying that lease that comes with it. And we want to make sure we have broad exposure, diversity to industries that are going to be defensive in nature, that are going to perform in good markets and in bad markets. So we go after groups like Goodyear, Firestone, Fresenius. Fresenius has got a $25 billion market cap. DaVita, Dollar Tree, Dollar General, CVS Boots Alliance, Walgreens Boots Alliance, Cleveland Clinic, Aldi. Even like some of these private companies that aren't publicly traded, we can look at their sales performance, like Aldi, Tractor Supply, Concentra. One of the other ones that I really like is even like an AT&T, a Verizon. Great brand, gorgeous buildings, well-located assets, huge market caps behind them. That's going to generate the value long-term for that asset. And then we buy these strategically in tax-friendly environment states. But what we really focus on is growth. The more people moving to certain pockets of the United States, the more folks are going to need these basic level services. People are going to have to go to the dentist. They're going to have to get to a veterinary clinic. They're going to have to shop at a grocery store. So we want to find states and pockets and markets that are growing. And so that's why we focused on what we call the smile states. That's, coined by Michael Flight over here. But Texas, Florida, Georgia, the Carolinas are experiencing tremendous growth. And so we want to be in those areas or the path of progress that's going to make sense over the next decade on a hold period. Now, Michael and I, we come from, private real estate syndication experience. I have a lot of REIT experience, and there's pros and cons to each strategy. I've owned REITs. They have their advantages. I'm in private syndications. They have their advantages. What I think tokenization does is blend the two best features of those. With the tokenized fund, you get all the taxation benefits of a private fund. You get depreciation. You get interest deductions. If you own a REIT, those dividends you're basically paying at ordinary income, or you have to shelter them in one of your IRAs, which reduces your liquidity optionality. So a tokenized fund is kind of the best of both worlds. There's also fractional ownership. It's easier for me to do monthly distributions. I can do peer-to-peer trading. So I can call one of you and say, hey, I've got a unit in this fund. Would you be interested in buying it at this price? Here's all the due diligence. You could ask all the questions. We could decide on a price, and we can trade it. Or you can go through a secondary exchange, a broker-dealer. We've got a lot of folks here that are actually focusing and specializing in that space. So at the end of the day, for me, it's about creating the most optionality for investors. That's really what it's all about. These are regulated securities. So our fund and other funds like it are regulated. You have full transparency, you get fractional ownership, you get liquidity, you get really fast settlement times. When you trade a stock, how many days does it take to make your money back? If you're in a private fund, good luck trying to sell. You're basically hoping that the sponsor is going to let you out. I'll give you a quick example. A good friend of mine in Dallas, we had a no-brainer deal. We had what's called a tenant in tow. We were building out a medical facility. That timeline was supposed to be 16 months. It actually took 36 months to wrap it up. I didn't get one distribution. And in that time, my wife and I had to go through IVF. We had to flip our house. We had a lot of other expenses. I would have loved to have that optionality to trade out, but I was basically pegged to that sponsor to do whatever they needed to do. Now, luckily, I got some money out, but not at the return that we thought it was going to be, and the guy was a little unethical. So giving more control to the individual investor, to me, is going to create so many different options, and I think that's ultimately at the core of this thing, which makes the most sense. The other neat feature is you get to select. What kind of cash flow do you want? Do you want US dollars? Cool. Do you want a USDC coin? Great. You want Ethereum? Great. You want a dollar cost average into these cryptos? Fantastic. You really get to decide. With other traditional funds or REITs, I mean, it's dollars in and dollars out. And you don't really get to have any exposure to the DeFi world unless you converted that and pay the tax toll every time. So you have, again, more options as an investor through a tokenized fund. Liquidity, just to kind of recap and summarize, you have a short, brief lockup period before you can trade this token. You can trade it person to person, what we call peer-to-peer. You can go business to business. You can go through an ATS, broker-dealer. There's other options available to you if you want to trade. What's really neat is that on our investor dashboard with us, we have essentially the option for you to go to multiple secondary exchanges on your platform. So you have a lot of optionality there. Currency selection. Again, your choice, US dollars, USDC, Ethereum. You can fund it multiple different ways. If you want to take some of your crypto off the sidelines, you can invest in crypto into the fund. You get extra earning power, obviously, if you want to get into the, the crypto ecosystem and go through DeFi, but you have options there. You've got fractional ownership. The Fed's already talking about a digital dollar. So we see this as the new financial rails for the system that we'll be all engaged in. Do you have time? Oh, can I go a little bit longer? You guys okay going a little longer? Why not? So our platform will basically onboard you through KYC AML. We'll have to go through an accreditation check. You can decide if you want your fund piece to be tokenized or not. Or you can just keep it like a traditional investment. You can select your wallet and custody selection. You can trade it through our platform. Lifecycle management, you're going to get NAV reports, so net asset value reports you'll have quarterly. We pay out monthly cash flow through a preferred return. You're going to get up-to-date reporting. And then obviously you're going to be on blockchain. So it creates all kinds of different DeFi opportunities. Here are some of our operational partners. So Securities is our registered transfer agent. Stonegate is our fund admin. FGMK, we've got a long-term relationship with. Bull Blockchain, who I think was supposed to be here today, is a great securities attorney regarding blockchain. So if you guys are interested in something like this, we highly recommend those folks. And then we bank with Signature Bank, and Black Manta is our broker-dealer for non-US markets. Here's the contact information for Michael Flight and myself. We have a booth here. You can always visit our website at www.libertyfund.io. And I know I'm running over. I tried to make it as fast as I could, but I'm also open to answer any questions or try to answer any questions that you all have. We'll be around. Let us know. Appreciate it.